have as FAIDA Investment Bank. It's called Oak Special Fund. My name is John Kimani. Yes, I know we've interacted with most of you regarding bonds, investing in government securities, treasury bonds, treasury bills, so on and so forth. But now, we got a new license, a very special license from the Capital Markets Authority, who are a regulator, to invest now in assets globally. You know, we realize that we are limiting our clients to local investments. Just government securities, invest in the government peke yake. But now we want to diversify that portfolio to allow you to go international and take advantage of global assets that have attractive and secure returns internationally. So, Oak Special Fund is a product of FAIDA Investment Bank. FAIDA Investment Bank, our motto is to link investors to opportunities. And we are licensed by the Capital Markets Authority. We've been in the market since 1995, and we're Kenya's oldest and most reputable investment banks. We operate in Kenya, and we started operations in Rwanda in 2007. So on Oak Special Fund, Oak Special Fund is a collective investment scheme, and we are licensed by the Capital Markets Authority. We offer investors access to local and global markets. So our products are, our main one is government securities. We invest in treasury bills and treasury bonds. And then we also invest in equities, local and international. So international equities, that is where our biggest cake comes from to increase our returns. By show of hands, how many of us have Facebook installed in their phones? In the room, I see it's almost 90 to 100% of you. So do you know that Meta, company that owns Facebook, for the last 12 months has reported a return of 82.42%. 82.42%. A company like Google, in the last 12 months, has a return of 30.26%, Uber 22.7%, and Amazon 41.9%. And these are net returns to their clients. So you see, what Oak gives you an opportunity is that you're not limited to Safaricom and EMBL and Nation shares. We are giving you an opportunity to invest in international markets, in the New York Stock Exchange, in the London Stock Exchange, and the Japan Stock Exchange as well. Other assets we invest in are commodities, like oil and wheat. And then we also invest in precious metals like gold and silver in paper value. So from our research, these are some of the investment challenges faced by SACCOs in money markets. One of the challenges is low returns. Money market will give you maybe around 12, 14, 15, depending on where treasury bills are offering their returns. So like now, the treasury bill has come down to around 14%. I'm sure your money market return will be revised down. Another challenge is high risk and volatility in single asset investments. We don't want you to just invest in single assets. Money markets, most of them, they are limited to investing in the local market. So they are limited to investing in treasury bills, treasury bonds, and then fixed deposit accounts, so on and so forth. Another challenge is limited access to international markets. So SACCOs lack the access and the expertise to invest in international markets. And that is where Oak comes in, because we have a team that has over 30 years experience in international assets and also local assets to maximize your return. Another challenge is the demand for above average returns with manageable risk exposure. SACCOs being owned by members, I presume, always demand for higher dividends and higher returns on the investments. And then they also want that return and the investment to be within a manageable risk profile. So that's where Oak comes in. We make sure we invest your money in an asset that brings a very good return. Like for example, the year from February 2024 to September 2024 for the 6 months, we gave our clients a return of 24.9% just because we can be able to invest in assets like Facebook and Google and Uber and so on and so forth. Now, for SACCOs, I think Oak Special Fund will be a solution for you because of the following reasons. One of them is that diversified investment approach. So you're not limited to investing the traditional way you're investing in fixed deposit accounts and money market funds. You have a basket of investments that range locally and globally. So just to make sure if one investment gives a low return or doesn't give a return at all, you have other investments that are bringing in very attractive returns. Another advantage is the managed risk. Our strategy is designed to protect against market volatility. For this one is even to added security, KCB is our custodian and Cooperative Bank is our trustee. So when you when you decide to invest in Oak, you do not send your money to FAIDA Investment Bank. You send your money to KCB custody. So KCB, us as FAIDA Investment Bank, then we come to KCB and tell them, invest the money for XYZ into this and this and this asset. They have to do an analysis to see that the assets make sense to them and also to the client. That is when now they are going to approve the investment. Cooperative Bank as well, being our trustee, we have to send periodic reports on how we're investing our clients' money. So Cooperative has also to give us consent on how we are going to manage our investments. Another solution is high liquidity. In Oak Fund, we have a minimum lock-in period of 6 months. The time period for these investments, as I mentioned, it's a short-term investment. It is 6 months to 1 year. So you can put in your money for 6 months, which is a lock-in period. After 6 months, you can choose to withdraw. Either withdraw the capital plus the profits, or just withdraw the profits and let it go on, or just leave it capital plus profits to continue accruing interest. So after 6 months, you can just write us an email and say, I'd like to withdraw my money plus the profit that has accrued, and we are going to send you the money within 3 working days. The projected return for Oak is 20%. That is our projection. We like to set that as our minimum. But you can see from the returns that we've given this year is that it has gone to 24.9% net returns for 6 months. Meaning if you do that annually, you get something around 40, 42, 45%. But now we'd like to put our targeted returns at 20%. Yes, these are returns year to date. For someone who put in $1 million shillings with us in February, on 30th of September, their account was reading 1.248 million. Most of them chose to just withdraw the profit and leave the 1 million. Others chose for it to continue for a whole year. So it is up to you, whatever you do after 6 months. The reason we are insisting on a 6-month lock-in period is because we're investing this money abroad. So to say we want to buy shares for Facebook, and then our projected growth period is for 2 months. So once you come and withdraw after a month or a month and a half, your money is already invested elsewhere. So you see at that point, you will have affected your portfolio. So this is a scenario if you invested your money with us in February 2024. As of September 2024, if you had put in 100 million with us, you would have earned a net return of 24.9 million. For 500 million, we then earned 500,000. And then for $1 billion, it's 249 million. And please note that these figures are net returns. So there are no taxes or commissions or management fees here. These are net returns to the client. I'll let my colleague Kashanja to take you through the other part of the presentation.
Thank you very much for taking the time.
Thank you, John. Okay, so we'll go to the next one. The performance of the fund, month on month, since when it started in February of this year. So you can see the absolute return for February was 0.37%. For March, it was 15.07%. For April, we were able to do an absolute return of 6.08%. For May, 0.77%. For June, 2.79%. For July, 1.32%. For August, 0.56%. And September, 1.35%. The next thing now we'll look at are the profit contributions. So 54% of our profits since February to September have come from placements of around 16%. From currency trading, we've been able to get a return of 41% in profits. For equities, we've been able to get a return of 14%. And from government securities, 1%. The negative 10 that you're seeing there from others are the various losses that we made since February to September. So if you look at the profit contributors, we are actually putting around 48% of the fund in placements. That is the call deposits, the call accounts and the fixed deposits. We are only investing between 20 to 30% in global markets. That is part of our risk management strategy, because as we know, even in the global markets, they can sometimes be volatile. So the exposure in the global markets, we cap it to 25% at any given time. Next, we can look at the advantages of the fund for SACCOs. The fund will provide higher returns, higher than the money market funds to the SACCOs. As my colleague had mentioned, I think money markets now are offering between maybe 12 to 14%. For us, we are putting a target of 20% per annum. Cash flow management, SACCOs can use the fund as a tool to even save for their dividend payments. Every month, the SACCO can be placing a certain amount towards building cash flows for dividend payments. And at the same time, those amounts that are put every month will be making a return. Access to global markets. That one I think also my colleague had talked about it. OAK is a platform for SACCOs to access the global markets. The other one is transparency in investments. All investments are submitted to CMA every quarter. In fact, if you go to the CMA website, under collective investment schemes, and then you go to org special fund, you'll be able to see the investments that we've done so far. Again, let's look at the risk management strategy that we're using to protect our clients' funds. Number one, liquidity risk. So we've put at least 48% of the funds in call accounts and fixed deposits. This one is to make sure that at any given time we have liquidity in case any of our clients they need their money immediately. We will be able to honor that request. The other one is market and price risk. So by diversifying in several investment assets, we are reducing the risk of, let's say, if we were only investing in equities or only in treasury bonds. But for all, since we have put the money and the investments in several investments, if one investment is bringing in low returns, we will be able to recover in the other investment, in the other asset classes. The other one is concentration risk. Other than the money that we've put in the call accounts and fixed deposits, for the other investments, we've put a limit of 25%. So for currencies, we cannot go beyond 25%. If it's equities, again, we cannot put in more than 25%. If it's treasury bonds, the same thing. This one will help us to reduce the risk of concentration. And at the same time, we also, if it's the, for example, the call accounts, we have several banks. We are not just working with one bank. That again reduces the risk. In case there's an issue with one bank, at least the other investments in the other banks are safe. The other strategies are now within the regulations for operating a collective investment scheme. It is a requirement by Capital Markets Authority for a fund manager to run a collective investment scheme. We need to have a custodian and a trustee. In this case, the custodian is KCB. They act as a safe. So as my colleague had explained, their role is to safeguard the client's funds. At the same time, it's important also to mention that by the fact that the funds are going to a custody account, they are not part of FAIDA's balance sheet. So in case anything happens to FAIDA Investment Bank, the money in the custody accounts are safe. At the same time also, the money in the custody is also not part of the bank's balance sheet. So in that respect, a custody account acts as a safe. The other one is the trustee. In this case, it's Cooperative Bank. They provide the oversight role and they report to CMA. So for example, we've said that so far, since February to September, the absolute return is 24.9%. The trustee in this case has to come in and verify that figure to confirm. Are we cooking figures to excite our clients, or these are actual returns? So you can be sure for the next audit that the trustee will be doing, that's one of the things they'll be verifying, and they'll have to put it in the audit, in the trustee's report. Next, again, is the CMA regulations, which we have to comply with, such as the audit and reporting. That one we are required to do by the regulator. We need to be having quarterly audits and again publish and share these reports with CMA. We also need to be fully compliant. That is, like we must make sure we have the necessary licenses from CMA, and to also continue with the obligations that may arise from time to time. There is also investor protection. So yeah, we also have CMA providing the oversight role. They usually do quarterly audits, again, just to make sure that the money in the custody account is safe, and that the investments that we are saying we are doing are actually the ones we've done. So now let's look at the features of the fund. The base currency is Kenya shilling. Minimum investment is 500,000. Minimum top-up is 50,000. Withdrawal charges are nil. Minimum lock-in period is 6 months. Withholding tax, nil. Management fee is 6% per annum, but it's prorated. So if the Sacco, let's say, invests for 6 months, they will only charge management fee for 6 months. What are the requirements for opening an account? For Saccos, we'll need a copy of the CR12, the PIN certificate, certificate of incorporation, ID copies of the account signatories and their KRA PIN certificates, passport size photos of account signatories, and a form that is duly filled and signed, and a board resolution to open an account with FAIDA Investment Bank. For individuals, it's KRA PIN certificate, copy of ID, passport size photo, and the front page, a scanned page of your accounts statement. And with that, because of time, I think we'll stop there, unless there are any questions.
Oh, there are no questions. Oh, you have a question? Thank you very much. You are well beyond our time. Please keep it brief.
Thank you. My question would be, now looking at the fund, since you've already the rate of return, the concern on the sharp dip from February to May would cause that sharp decline, saying that the 24.9% was taken into account that was projected immediately after inception. That is March. What could have caused that?
Thank you. If you let's go back to the absolute returns for month to month. But what happened in the month of March, the AUM grew significantly. So if you look at the month of February, you'll notice the return was really high. And that was because the AUM at that time, I think we were operating with 120 million. But in the month of March, it grew significantly to around 225 million. So when you look at the formula for calculating the absolute return, we factor in also the assets under management. That is the one now that reduced the return for that month. Any other question?
All right. There's a question here. It's two guys. It's two. We are well beyond our time.
So thank you. This 6% management fees, what is it based on?
That one is based on the return. So for the fund, when we deliver a return of 20%, we actually made a return of 26%. So we remove the 6% first, then we deliver the 20%. Yeah, and it's also prorated.
Okay. Right. I think that's it.
All right. Okay. Thank you very much. In case of any more questions, let me share the contacts. Feel free to get in touch with us. Thank you.
Okay. Asante sana. Let us appreciate the FAIDA investment team.